Hello everyone, this is Megha Bhandari and I'm delighted to have you all with us today. So in this episode, we'll be talking about equity investing because while the markets can be unpredictable, your investment journey does not need to be. So joining us today is Mr. Arun Sundaresan, who would shed light on an approach to navigating market volatility with more confidence. So let's dive in. Welcome, sir. So, sir, volatility has been the new buzzword since the past few months, and the markets have been extremely unpredictable at the moment. So, sir, do you think the Nippon India Nifty 500 Low Volatility 50 Index Fund has the potential to address investors' worries?
Thank you, Megha. You're right. The current market context, the volatility is very high in the market right now. But even otherwise, the markets can be quite volatile from time to time. That's an inherent nature of equity markets, and one needs to ride that volatility to make returns over a period of time. Now, this new fund, which is inherently based on low volatility, it tries to identify stocks and capture the returns. But the essence, the basis of picking those stocks would be relatively low volatility. The price volatility of the stocks will have to be relatively low, and that's how the portfolio gets constructed. It does have the potential in relative sense within the equity asset class. It could address this concern of volatility, and it could be relatively better placed when compared to other equity products, especially in this kind of market context.
So, sir, can you define for our viewers what low volatility stocks actually mean?
Okay, so this is an index fund. So the index provider puts in the methodology and will simply replicate. This particular fund uses only one parameter, which is low volatility, the definition of which is the standard deviation, the lower standard deviation. So the last 1 year data is considered, and whichever stocks are lower in terms of standard deviation of price returns over the last 1 year, those stocks are identified. In fact, the top 50 stocks from the universe of Nifty 500 are identified basis this particular parameter, and they come into the portfolio.
So, sir, can you throw some light on how does the index select these stocks and how often are they rebalanced?
Sure. So, as I mentioned in the previous response, last 1 year price returns are compared, and the lower volatility, the standard deviation of those price returns are compared. Whichever stocks are the top 50 out of the universe of Nifty 500, they get picked up. So those 50 stocks are considered to be relatively low volatility. Once you do that, there is another step in which the market capitalization of the stocks are also considered. So both the low volatility score and the market capitalization are multiplied. That is how the weights in the portfolio are determined. Ultimately, that becomes the portfolio for you. So it's not just the top 50 stocks and then you equal weight or just do it basis the low volatility score. It's a combination of low volatility as well as the market cap that determines the actual portfolio, the weights. Now, in terms of rebalancing, the portfolio undergoes rebalancing twice in a year, once in June and once in December.
So, sir, does low volatility means low returns? And do you think that this fund is more suitable for conservative investors?
Lower volatility means lower risk, and the general understanding could be that lower risk could mean lower return. But it need not necessarily be, and let me explain to you with an example. Suppose there is a stock which is 100 rupees and it falls by 10%, 90 rupees. Okay. Even going up by only 11.1, you will be back to 100. Okay. On the other hand, if this stock was very volatile and if it fell by 25%, 100 became 75. For 75 to come back to 100, it has to rise almost by 34%. So therefore, lower volatility need not necessarily mean lower return. In fact, this particular index, when we have done backtesting based on the last 20-year data, on many occasions, 1 year, 3 year, 5 year, 10 year rolling return, even CAGR return, the return profile is much better than even the parent index of Nifty 500. So therefore, one cannot say that this is only for conservative investors. Of course, this is an equity product. It contains all the risk of equity, but within equity, this has a relatively different risk-return profile.
So, sir, who would you think is an ideal investor, to invest in this fund?
So, first of all, investors will have to understand this is an equity product. So, it has all the risk and return of equity in that sense. But within equity, this is a differentiated product. It invests based on low volatility and therefore offers a risk-return profile in relative sense slightly, when compared to very aggressive strategies, slightly on the lower side in terms of risk and return profile. To that extent, people seeking returns at the same time relatively on a consistent basis because of the relatively low volatility profile, those kind of investors, they may want to consider this particular fund.
Thank you so much, sir. For more information, please refer to the link below. Until then, stay happy, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.